Hey everyone, welcome back to the Hashrate Happy Hour Podcast. This show is brought to you by Giga Energy, a leading electrical manufacturer focused on Bitcoin mining. The team over there will get you taken care of for all of your electrical infrastructure needs to get your Bitcoin mining operation up and running. This week on the show, I had the pleasure of sitting down with Rob Chang, the CEO and founder of Gryphon Digital Mining. This episode is a ton of fun for me because Rob and I actually had a very similar start to Bitcoin and Bitcoin mining, which was that we made a promise to ourselves that when the next big thing like the internet came around, we would jump on that opportunity without pause. We then get into the similarities of traditional metal mining and Bitcoin mining. We get into all sorts of strategy around effectively allocating capital. And then Rob drops an absolute bomb at the end as far as what we can expect to see out of Gryphon Digital Mining in the very near future. So you're absolutely going to want to stick around to the end of the show to catch that. This show is brought to you by Foreman, the leading miner management software, where you can also manage and automate your curtailment strategy all from one clean dashboard. Whether you have 3 miners or 30,000 miners and a robust, complicated curtailment strategy in a regulated power market, you can manage all of that leveraging Foreman. Guys, I honestly don't think I'm doing this software justice just by talking about it. You really need to go give this a try for yourselves just to understand how easy it is to start and quickly find multiple miners all at once, configure them all at once, and then set up your automated prompts for ramp up and ramp down for the particular curtailment strategy that you have. Seriously, if I can do this, which I have, and I still use to this day, then all of you certainly can do this too. Go check them out and get started managing your miners like a pro today at foreman.mn. That's FOREMAN.MN, foreman.mn. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through the 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. Hey everybody, welcome back to the show. Like I said in the introduction, I'm here with Rob Chang, the CEO at Gryphon Mining. Rob, welcome to the show.
Thanks for having me. Excited.
I'm super excited to get into this, Rob. It's everything that you're doing and everything that Gryphon Mining is doing has been something that's, been on my radar for a while. And you guys are one of those companies, and we're going to get into all this. So I'm not trying to jump too far into the conversation, but you're very ESG focused. You're asset light operator in the space. So I'm pumped to dig into this.
Oh, happy to share, and thanks for your interest.
Yeah, and so actually, before we get too far into this conversation, Rob, I think you were out at Pacific Bitcoin last week. How was that for you?
I enjoyed it. Given that I represent a company, I usually go out to events that are investor driven or capital markets driven. So it's refreshing to go to an event that is Bitcoin focused, talk about the industry, learn more. It was definitely an educational, meet other like-minded people in the space type of meeting, as opposed to going to an event where you're on and pitching to investors the whole time. So it's refreshing. It's great to hear new thoughts. It's great to meet new people. It's a wonderful environment. So I would actually suggest anyone who is into Bitcoin to join these events to experience the excitement, learn new things, because there's the evolution of thought in this space is just so rapid and so quick and so diverse that it's very helpful to meet people who are thinking in the space and learn more. Also, because it's just such a new industry, there's so many things advancing all the time. You just kind of need to show up just to understand what's next and what's current.
Yeah. I mean, it's like every month there's something new going on, and I couldn't agree with you more. I was blown away. Like, huge shout out to the team at Swan Bitcoin that puts this on, and I mean, they just knocked it out of the park. And like you said, it was this really refreshing, like, you get to be surrounded by Bitcoin focused people but not have to be like on all the time. There was actually a huge amount of Bitcoin mining at the event too.
There was. It was nice to see. None of us really. Not many of us talked to each other. At least that I was aware of, saying that we're showing up. But then, as you're walking around, like, hey, you're here. Hey, you're there. So it was nice. Of course, we're there. But yeah, it was definitely great to see.
Yeah, absolutely. Awesome. Well, so Rob, what I like to do, with guests on the show is I really like to start with people's backgrounds. I think it does, a nice job of helping kind of set up the rest of the discussion so the audience kind of understands where you're going to be coming from. So I'd love a walk through your background and like, how the hell did that get you into Bitcoin mining?
Yeah, it's actually interesting. Thanks for asking. So prior to my Bitcoin life, I was 15 some odd years in the capital markets world, hedge fund, research. My last stint prior to jumping over to the brighter side, let's call it, is I was the managing director, head of metals and mining research at Cantor Fitzgerald. This is traditional metals and mining. So I'm one of the few, I think, who can say he's done mining in every way, given that I was the dirty stuff coming out of the ground. I had to go into holes and visit sites that way. So I was doing that for about 15 some odd years. At one point, Bloomberg actually named me the top precious metals analyst in Q1 2016, which was great. People know me a lot for uranium, and actually I sit on uranium boards now ever since I left my capital markets job. So I still am related to that side of the business, that side of the mining world. But yeah, so I did that for 15 some odd years. And the reason why I switched was something I promised teenage Rob. When I was around a teenager, that's when the internet started showing up. And I noticed that the internet, it was great in a variety of ways. You got to do a lot of cool things because it was a new technology. And so that was very exciting. You could be a world changer right off the bat. And then the other reason, a little more selfishly, is that I found out that anyone who did something even remotely interesting or decent in that space tended to do very well for themselves financially as well.
Yes.
So I told myself, Rob, next time you see some type of world-changing technology that shows up, drop everything and do it. So I promised myself that when I was, 18, 19, something around then. And lo and behold, in 2018, I had an investor that I really respected that I was talking to who put, I think, 1% into Bitcoin of his portfolio, which blew my mind because back then I didn't know much about the whole industry. 17, actually. I didn't know much about the industry. I actually thought Bitcoin was, someone smarter than me would be able to steal my Bitcoin. So why would I bother doing this? But when someone like that did it, it prompted me to do some research. I then realized after doing that research that Bitcoin was going to change the world. We can go down that rabbit hole, but you probably talk about it ad nauseum, and most of your listeners probably know. But after realizing how important blockchain and Bitcoin was going to be, that was my drop everything moment. It happened that some investors in early stage Riot blockchain, now Riot platforms, was looking for a CFO, checked in with me, and I said, hey, I'd be interested. Had a couple of meetings and decided to join. So I joined Riot in early 2018, just a little bit after it went public, I think late 2017, and dropped in, parachuted at the top of the mountain, actually, because Riot at that time was the largest publicly traded, first NASDAQ traded publicly traded Bitcoin miner. And was able to learn at the top of the hill. Was a very interesting experience, given that was the beginning of Bitcoin prices coming down pretty hard. And also at the time when, because Riot was first, you always get most of the attention. So the regulators were very difficult, let's call it, with us. We also had some negative media attention, which was not nice. And of course, a variety of other things, lawsuits, standard stuff that happens when you're first in. You usually get a lot of heat. And so it was a great trial by fire, because not only did I get to learn about blockchain Bitcoin from a CFO role of the largest publicly traded on the NASDAQ, or the only at the time for a bit, it was also learning how to run a business that was under fire from three different areas at the same time. Like, we had banks shut down our bank account because we were blockchain. Which is not which is now a common story given what happened recently, but at the time was something that was unique. We had an auditor leave us because we were blockchain. So there's lots of different things that you have to just deal with. So I got to learn how to run a business well, it was interesting because Riot at one point was in quite a lot of trouble, and it was questionable whether we could have survived a few more weeks. But thankfully, I was able to rescue that with finding first $3 million of capital to bridge some short-term issues, and then later paving the way for $100 million financing, which helped launch the company forward. So what could have been a bankruptcy in late 2018 ended up becoming multi-billion-dollar company at some point, largest, even now, I think, at least by market cap, largest publicly traded Bitcoin mining company. So I'm pretty proud of that, and got a lot of battle scars from it, but that was my experience there. What I ended up doing, though, in 2019 was decide to move on to other consulting opportunities in the same space. I was also, among other things, a senior consultant at Hive. So I think I'm one of the few people who've been a senior person at two publicly traded Bitcoin miners. Had the opportunity to learn and also help Hive move forward for a bit for that time. And then the interesting thing happened was I ran into a group of people who thought about building a Bitcoin miner exactly the same way that I did. After my experience with those two companies and a few others, I had a very set way of strong belief of how a Bitcoin miner should be built. And thankfully enough, I had a group of people who agreed with me. And so that's how Gryphon Digital Mining started, and how we executed was essentially the the plan that we had, which was asset light, focus on ESG, and build a team that is blue chip, designed for the future, as opposed to what is very common in hot industries, the more pump and dump style of build up, where you just grow really fast, not really care, and just try to get a high valuation. And now that we've seen one downturn, a major downturn anyway, we've seen some guys fall apart or barely hang on, whereas I would say did pretty well. I wouldn't say we sailed through because it was tough for everyone, but we have a debt provider, and our debt provider basically told us that we were the least concern for them, or no concern for them, because we were so set up so well, right? So it's we want to do things right, and we want to be the blue chip company in the space, and we're set up. We try to set ourselves up for that.
Oh wow, yeah, that's so Rob, I actually have to take you back to the metals and mining, and then I
Sure.
promise I'm gonna bring you back. I'm gonna bring you back to your last comment about building a mining company the way that you wanted to, because we're gonna dive into that. But metals and mining,
Yes.
so talk to me, like what type of evaluation are you doing? And I'll give you why I'm curious about it, because so I was at Pacific Bitcoin and I heard Patrick Fleury, the CFO at TeraWolf, he was up on a panel and he said, I'm going to shake this shit up and I'm going to give you guys a wild perspective that you don't hear. And he's like, the HODL method for a publicly traded Bitcoin mining company is crazy. And he said, no other company in the traditional commodities mining industry would ever do that. Is that, what do you think about that?
He is mostly correct, and I
Yeah.
somewhat agree with him, but in stages. So let me qualify that.
Yeah.
Uranium companies, and I know that because I sit on boards and I realize this, and I've seen this, did accumulate and hold uranium that they didn't even produce. So it is, I wouldn't say it's common, it's actually very uncommon for this to happen, but it made sense because the dynamics between the two, Bitcoin and uranium, were similar, in that scarce commodity, and there was high investor demand for that material, and very difficult for investors to buy the actual material themselves. Uranium, for obvious reasons, it's uranium. You can't put that in your pocket.
Yeah.
Bitcoin, of course, because of knowledge issues and knowing how to do it. And if you use the wrong exchange, you could possibly lose the Bitcoin, things of that nature. So I saw that because the similarities in the two industries, it worked for uranium companies, and their valuations skyrocketed for the same reason that Bitcoin miners, valuation skyrocketed, because investors did not have access to do it themselves. They use these companies as proxies to do it. So that's generally the only situation where this makes sense. And I would agree that once the general public has an easy way to buy and hold Bitcoin themselves, which currently still doesn't really exist to the level where average everyday Joe who doesn't know much could do it. I still think
you tell my parents to go buy Bitcoin and then self custody it, and they'll look at you like you have antennas on your head. So
yeah, exactly, it's going to take a lot of effort. Why am I doing this? This is funny money. You get all that weird unfortunate conversation. So that's where I am is, yes, if we were a traditional commodity company, blow out all of your production, because that's what you should do. That's what gold companies do. That's what copper companies do. They barely ever hold much inventory, and they don't do it strategically because it just doesn't make sense. Because why hold it when your investor can do it for you themselves? That's usually the thinking behind that. And I'm glad you asked the question because I'm one of the few unique people who've had very good experience on both sides. That doesn't exist in the Bitcoin world. So until it does, miners can and I believe should be rewarded for doing it. However, they now become de facto investment managers of the Bitcoin themselves. And what they shouldn't be doing, in my opinion, is blindly holding on to the Bitcoin, regardless of what happens with it. And that's a trading risk management type of thing because we already know now, based on history, who held Bitcoin from high 60s down to 20s and then were the reason why Bitcoin went below 20 because at that point they had to blow it out because they were in so much trouble they had to sell, right? So that type of management, I believe, is a bad idea. So if you're going to hold it and be the proxy holder of Bitcoin for investors, you need to manage it a little smarter, in my opinion, or be in those situations. Knock on wood, we've been doing it right, either through luck or through knowledge. People can take their choice, but we started selling all of our Bitcoin for us when it hit 40-ish on its way down. And we decided to start holding more, not total hodl, but started holding more when it was below 20s on its way back up. And now we're kind of doing an even split. Not even split, but now it's an operating cost split for us, whereas we hold the excess and we just sell the cash, which I think is the bare minimum that most companies should do. I'm not going to tell them how to do it, but you're seeing companies raise capital through the equity markets to pay for operating expenses and holding all the Bitcoin, not selling any, or at least they did, thinking that makes more sense, which does if Bitcoin keeps on taking off. But when Bitcoin goes down, you're effectively hurting the investors through dilution, one, and then through the lowering value of Bitcoin, two. So you're not doing anyone any favors devaluing investors like that from two fronts.
I appreciate you riffing on that a little bit because I just, again, the metals and mining experience that you have, I was like, ooh, this would be a good one to ask Rob. So
you're the first person to ask it, and it's a great question.
Yeah. I appreciate that. I'm also curious on the metals and mining side, just like evaluating, and this probably is going to lead nicely into like why you saw, this opportunity to start a mining company the way you think it should be started. But when I would imagine you were evaluating actual metal mining operations and you were trying to compare them on an apples to apples basis.
Yeah.
Did you take some of that modeling experience over with you into the Bitcoin world? Like, were you able to start modeling out Bitcoin mining kind of similarly?
It's funny. Being first gives you a lot of different things. So it's funny. There were no analysts in the space for Bitcoin prior to Riot showing up, given that there were no companies to cover. And so when it first started out, I spoke with the analysts that started showing up, and I was effectively showing them how to model it. So, which is great, and this is also taken from my experience as an analyst when I was when I was at Cantor. You do ask the companies to give you guidance on how to do it because they know it better than you do. It totally makes sense. But given how new it was, I was just full on showing them how to do it. So I don't know how much of what they do still is the stuff I originally showed them. Obviously, it would evolve. But they had the benefit of having someone that sat in their seats, showing them exactly how it should look, or at least the way I thought it should look. So I would say a lot of the analytics that happen now could be influenced by the stuff that I originally showed them because that was kind of the baseline.
Yeah.
But yeah, there's lots of ways of looking at it. Like there's discounted cash flows, which is always the smart way of doing it, given that at the end of the day, cash flows should value your business. Also realizing that Bitcoin mining is in the industry type stage where it goes more on hype and activity, and then more in those situations, the more basic valuations are the ones that matter. So the ones that I think really drive valuations is because the retail looks at it and it's easy and they can understand it, is generally market cap per exahash, right? And that's generally the modeling style, not modeling, the valuation style that most companies use, because that's like the industry is very retail heavy. And so whatever works for retail is what's really going to drive market. So I believe that that's probably the most important metric, either market cap or enterprise value over deployed hash rate, right? Because it's just valuing how much you're worth for how much your revenue generating power. So that's that part. But yeah, other than that, you're looking at multiples of revenue and then discounted cash flow models as well. But at the end of the day, it's multiples of hash rate, I believe.
Yeah. No, I'm fascinated by it. My audience has probably heard me say it on a handful of episodes. I'm wildly fascinated by the modeling. I don't have a financial background, so for me, I'm looking at that type of activity, modeling and the financial modeling, and it's super interesting to me because I like to look at that, and then that kind of helps drive the business. I'd be curious, Rob, was that your approach to Gryphon? Because you mentioned, you had a very particular idea of how a mining company should be built up.
Yeah.
You met the right people that were like, hey, yeah, that's totally how we think about it. Was it more modeling driven and then executed? Like, maybe kind of touch on that.
Yeah, no, it was experience driven entirely.
Okay. Yeah.
Given that I ran Riot and given that I did other ones, including Hive, I saw what I believe to be mistakes repeated over and over again on how to approach a company, a Bitcoin miner. And so with Gryphon, we did it a totally different way. And namely, it's the asset light model. Investors give us $1, and most mining companies, I think everyone but maybe 2 or 3, us included, spend a portion of it on machines, majority of it, and then spend a portion of it on building their own facilities. Whereas when we started, Bitcoin was ripping, gross profits were huge. So when I take $1, why am I building a cost center when I could just buy more machines with that and make up the difference with higher gross profits right now? So what we did instead was we went to the hosting model, where we pay someone to run their operations that they've already built and just give them machines and have them run it. So it ended up that instead of, I'm just making these numbers up, but a 50-50 split or a 70-30 machines to infrastructure split, I was pretty much 95 to 98% machines. So we were able to grow pretty rapidly. When we did our first order of 7,200 S19J Pros in 2021, the Cointelegraph picked it up and said that we were a top 15 miner. I think they said we're number 14. I don't know where they got their numbers, but that was kind of cool to see that they wrote that.
Yeah.
And that was off our first order. We've gotten bigger since then. But that was because we didn't split it, because I did see other peers who no longer exist now start off similarly to us, but they started off with half the machines that we had because they built up their own facilities, which also took 6 to 8 months to build anyway. So that's the problem, is that myself as well as Chris Ency, who is our currently Gryphon chief technical advisor, but also when I was with Riot, he was a COO and interim CEO. He also did a little bit of work with Marathon. We've run miners and we've realized that it didn't make sense. And here's an example. When we were with Riot, when we started building a facility that cost, I think, $12 to $15 million or so to build, it took us 6 to 8 months for it to finally be fully up and running. Bitcoin at that time was at 16, 17,000 to 18, somewhere in there, high teens. And by the time we turned everything on, it was at 7, on its way down to 3. And so our costs were pretty much right there at 7. And so we pretty much didn't make money until everything was, we didn't make money really almost at all, because we were barely making anything as everything was running up. And then right when everything turned on, we were at break even, and then we started losing. So that type of experience showed me speed matters, deployment matters, capital usage is really important. And that's the key thing is, and I'm going to jump on my soapbox a little bit. I think one of the biggest issues in the Bitcoin mining space is that we have many management teams who focus on growth almost at any cost and don't really care about capital deployment or capital efficiency. And so they end up overspending either through bad deals or bad financings that cost their investors a lot more. Whereas on our side, many of us, including my main investors, are all former capital markets people. So we're very focused on return of capital, making sure that we stretch the dollar as much as possible. And the proof's in the pudding. I did an analysis of the capital use, basically all the equity raised and all the debt raised for every company, and to build their company soup to nuts. It's cost Gryphon $44 a terahash to build our company soup to nuts. The average for everyone else is in the 116, 120 range. And
Oh,
many of
wow.
the big players that you've heard of are in the 130 to 160 range. Like the next closest guy to us is in the 60s. So we're at least 50% more efficient than the next most capital efficient miner. And we are by far more efficient than everyone else from that metric. And that's something that people don't really talk about because it's not sexy. But as an investor, I really do care on
Yeah.
how many dollars get spent. And that's because we're all major shareholders, right? So it matters for us.
And now a quick word from our sponsor. This show is powered by Giga Energy. Giga Energy is a vertically integrated Bitcoin mining company that manufactures all of the electrical infrastructure needed to start mining Bitcoin. Whether that's the medium voltage switchgear, the PDUs, or the power cables for your miners, the team over at Giga Energy has you covered. Reach out to their sales team today for all of your electrical infrastructure needs at sales@gigaenergy.com and use the word hashrate for the subject of the email to receive 5% off your order.
Wow. Okay. There's a lot in there. And I appreciate all of that. So I think, I guess what kind of comes up for me next, Rob, is like,
Mhm.
obviously between the experience at Riot Hive and then your experience in the capital markets and metals and mining, you have clearly weighed the risk profile of being asset light like this. And, I guess what I'm speaking to more so is like, you know, PPA risk with your hosting provider, or just like power production risk, which is really your raw input for the mining.
Yeah.
How did you think through like the risk profile of not controlling it? Because I think
Yeah.
a lot of it comes down to people are like, well, I need to control the PPA, or I need to control the infrastructure, that sort of thing. So I'd
Yeah.
love to hear how you think about that.
Yeah, and I fully admit we do open ourselves up to that risk, whereby the energy prices can go way out of whack, and we don't really have as much control because we have a host provider that could potentially dictate it to us, and we can't really do anything other than move. So, in response to that, the most easy thing is to always be aware and always be searching. Like we've never stopped searching for other host locations, either through growth or potential needs to move. So we've always
Mm-hmm.
been at least looking at 3 to 7 different opportunities at any given time for for me, last 5 years. So that's not stopped. But in a general sense, the way we look at it is this: you got to find your host locations in places where it's low risk of getting quote unquote screwed.
Yep.
For example, most of our operations right now are in a facility called Coinmint, located in upstate New York, a town called Messina, right by the water, across the water from Cornwall, if people know the Canadian side of that. And it is an economic opportunity zone. So number one, there's going to be less
Ooh.
competition for
Yeah.
power because of what it is. It was a former Alcoa smelter, and unrelated to the fact that I'm in mining, it just happened to be there before that. But they just ran out of material, so they built up all this massive infrastructure, and what Alcoa did required tons of power, and so there was stranded power there, right? And so a Bitcoin host provider moved into that area and started using up that power. So when you're in a situation like that, the likelihood of getting quote unquote screwed is lower because there's not much industry around to fight with you. There's got to be a reason why it was named an economic opportunity zone, and
Yep.
so the area needs more development anyway. So you find situations like that where it's low risk. Like to be clear, our situation, because we're with the New York Power Authority, there are no contracts, so it is market related and it fluctuates. But because we're in an area where there's very little competition for power anyway, we're generally pretty good. That
Yeah.
doesn't mean we don't have to shut down because, super hot air times, that's just like anywhere else we do. I think people in North America remember that around Christmas time / New Year's, there was that really brutal cold snap where everyone shut down. You saw the global hash rate really plummet during that time, but we were affected.
Yeah.
But relatively speaking, we don't turn off that often. And we've managed some machines in Texas, and those turn off almost all the time, especially in the summer. We barely did. And so we are susceptible to the same things. But if you choose the right locations, you're going to be pretty good. And so far, knock on wood, we've been doing it. And hopefully we can replicate that process more and more. What I would say is that we've been doing it, at least myself, for 5 years, since 2018 now. And so, knock on wood, I think I've been doing it okay. And hopefully we can keep on replicating it. but there is that risk, and it does make finding other locations difficult because it is an ideal situation that we have, or not ideal, but a very strong situation. And so in finding others like this is a bit of a challenge, and we're a lot more picky than most. Like most of the guys who call me who are trying to broker these deals know that we're a pain in the ass to deal with because we have so many criteria. But we're also pretty profitable because we have these criteria. Whereas I know of several operations where they're running machines, but they're barely making any money because they're not doing good deals, and we want to do only good deals.
Yeah. Oh, absolutely. I think that's a good point. You know, as long as the location is really picked out to be the most advantageous, because, you know, kind of the other thing I was thinking about was like, especially the focus on this podcast is really about like the energy consumption of Bitcoin mining. And
Yeah.
one of the ways that Bitcoin mining can be accretive to the electrical grid is to be in demand response programs and ancillary services, and really act as flexible as it can be. And so I was curious, you know, what does uptime look like for you if a hosting provider has to participate in one of these programs? But it sounds like you guys are just site selecting kind of around that.
Yeah, we're site selecting around that. We don't deal with it because there are no demand response scenarios for us. This just isn't a thing where we're located. Um, but I do agree that it makes sense, and this is one of the things that at Pacific Bitcoin, someone made a good point. I forgot the gentleman's name, but we really should be, the industry and the world should really be focusing on how Bitcoin miners use power as opposed to the type of power they use, because it really shouldn't matter, quite honestly, if it's gas or whatnot. It's really more a matter of using it when others need it and stealing it from them. And as long as the energy use is being controlled in the right way, what we're doing, what a miner is doing is utilizing the excess capacity, which benefits the growth of proper power when it's needed, and then turning off in situations where more power is needed. It's actually grid stability, which is more important than it is exactly what you're picking. And then as we transition into more hydro and whatnot, it's definitely ideal. But just blindly looking at just carbon versus non-carbon is not the right way of looking at it. And I'm saying this almost against what Gryphon's doing because we're 100% carbon neutral. But I do understand that the industry and the public should get off the whole focus on that and look at it in a more practical way.
I think so too. I mean, I couldn't agree with that statement anymore. It's a very bizarre thing that we seem to be the one industry, and I am open to, like, maybe I'm wrong by saying that, but I think we are one of the only industries out there that gets criticized for the type of power used. Like you don't hear about smelting plants getting criticized for
No.
using their energy mix. But you brought up a point that I wanted to kind of double click on, Rob, was your ESG focus. It ultimately does drive you guys to low cost power, but I'd love to hear why the ESG focus, because I think you did it before everyone else was doing it, or before it was cool.
Yeah, you stole my line. We made a conscious decision in late 2020, even a little bit before I joined, that Gryphon was going to be 100% carbon neutral for a variety of reasons. One, it's really the right thing to do because promoting, if we can, the development of renewable resources or zero carbon power is better than supporting the growth of carbon emitting one. So there's that. But it's also the evolution, let's call it, of the capital markets. It is becoming increasingly evident that at worst, being carbon neutral / ESG focused is a bonus for some investors, and for some others, and for a significant amount of others, it's actually a requirement. And we're seeing that a lot from, in particular, Europe, where there is a criteria where if you are not a certain level of ESG, they won't even look at you. And so if you're starting up a new company, you might as well open it up to everyone as opposed to immediately separating out a group of potential investors. So there was two reasons. One is just it's doing the right thing, and two, just maximizing the total addressable market of investors and the like. So it was for those two reasons that we moved in this direction, and we're very happy to do so, because not only a few months later, Elon Musk made a big stink about energy use, and then everyone started caring about it.
Yep. Yeah. Oh, okay. That's yeah, I think that it's and you've said this a handful of times, it's unique, and I think it's the right thing to focus on, and there's several reasons for why it's the right thing to focus on. I appreciate that. So, Rob, maybe as we're just kind of keeping a tab on the time here,
Mhm.
I'd love for you to walk through some of the exciting things that you can share about Gryphon Mining. What does 2, 5, 10 years look like for Gryphon? What are you guys working on? What might people expect to see from you guys?
Yeah. Well, the one thing I actually want to shovel in there because I didn't say it is on an ESG topic just before we leave it is we're also uniquely carbon negative, and that's one thing I also want to highlight because we really do fundamentally care.
Oh yeah.
We own, even though our base operations are 100% carbon neutral because it's hydro, we own carbon offset credits to take care of our, let's call it tier 2 and tier 3 emissions, such as travel to conferences and the air and the offsetting that,
Mm,
delivery of machines and the offsetting of deliveries of that. So we I think uniquely the only company that is carbon negative from that perspective. So whereas others are moving from 80% carbon emitting to 50% and declaring great success there, we are going from zero to negative. I don't know the exact number, but negative X. So we're actually helping, if you could say,
sure.
putting removing carbon at this point as opposed to adding. So we just certainly wanted to put that feather in our own cap to let everyone know that.
Yeah, yeah.
Um,
Yeah, well, I appreciate. Are you guys working with Sustainable Bitcoin Protocol at all by chance?
Not directly. We are working with the Green Proofs for Bitcoin certification. So we were one of the first 5 companies to get that certification, where they analyze your emissions and
Wow.
give the certification. So that's actually great. And I'm glad you brought this topic up. The industry requires some auditing, let's call it, from
Yeah.
greenwashing or just messaging to sound like you're doing something when you're really not. Kind of like how an oil and gas company says they're doing great on progressing their emissions, and then you find out
Yeah.
it's going from 90% to 88% or something like that. With this, you have a third party audited group that's looking at the actual emissions and providing a certification that at the very least you're over 50%. Of course, we believe we're at 100%. So when they start tightening it or doing several tiers, we probably will qualify for the higher tiers. But at least there is now an outside group that's auditing this to really put some meat and some validity to the claims when people say they're doing more ESG stuff or more carbon neutral stuff. That in fact we actually are, and I'm pretty
Yeah.
happy about that because everyone says they're doing something carbon neutral, and then when you dig in, you find out that it's not really. So yeah, great question. I'm glad you brought that up.
Yeah, absolutely. I had a pretty cool conversation with Elliot David. He heads up, they're pretty lean team, so he heads up a lot of things. But him and I had a very very good conversation about how they've got a token that helps mining company. I think CleanSpark is one of the major users of their protocol. It's a tokenized way to verify the greenness of your energy source. So
Yeah,
yeah, it's
I've seen that.
yeah.
Yeah,
Yeah, very cool.
it is.
So I guess Rob, I'd also again I'd love to hear what can you tease out as far as like
Hmm.
what can we expect from you and your group and Gryphon, and what does 2, 5, 10 years look like?
Yeah, thanks for bringing me back to the question. So I have something even shorter term. We are fairly advanced in our work towards merging with Akerna. We're in the SEC comment period process. We think it's going very well, but we think we're probably on the shorter end. Fingers crossed on being
Wow.
able to announce that everything is good and done. So let's see. Like you never know until it's done, but we believe it's progressing extremely well. So hopefully we'll become public before the end of the year. And then we'll be up and running. People can invest in us. We can raise some capital and start really deploying into what we believe is the better way of doing things. As a next
Oh
step,
shit!
we'll,
Wow,
yes, it's
that's
pretty
very
exciting.
exciting.
Yeah,
Yeah.
it'll be nice to see where we measure up because metrics wise, we're very strong. We're smaller. I fully recognize that. But metrics wise, like for example, Bitcoin efficiency is super important. And since inception, we've always been top 3 in terms of the number of Bitcoin generated per exahash deployed. And in 9 out of the last 12 months, we've been number 1. And so execution wise, again, it's because we have experience. Proof is in the pudding. We have outperformed every publicly disclosing miner in terms of Bitcoin efficiency. So we think valuation wise, we should get a bit of a bump relative to that because it's premium operations. But we'll see. But yeah, short term, going public. The next couple of years will be business as usual from any miner, really, which is growth, finding good deals.
Yep.
Which again, capital management for us, it's all about paybacks, finding machines at good prices, finding facilities at good prices, and buying that. So we'll be doing that. Interested in having conversations with some smaller miners who had a tough time. We're going into halving, and so some miners might not want to have to deal with it. They haven't done it before. I've done it. My partner Chris has done it a couple of times. So we've managed through those, and we believe we've set ourselves up for success, given that we have low cost operations and we're extremely Bitcoin efficient. But talking to maybe some private guys who maybe either want to get out or get bigger, maybe do some mergers that way. And get size that way. So either buy through capital raising and buying machines and potentially facilities, and through mergers, I think we can get big pretty quickly. One thing I want to note: we are asset light, but I'm not doggedly only sticking to just that idea. And that's one of the key things about Gryphon is that we are open minded. We never say no to an idea. We at least listen to it,
Sure,
and hear and think about it. And one of the things I want to leave the door open is to replicate what I did before. And I'll point out, as when I was with Hive, there was an acquisition of a facility that cost, I can't remember now, over $12 million, I think, to build. And we bought it for 1 to 2. And so situations like that, which usually occur during down periods, which we might be with the halving, we might. Although there's arguments that we might not see much of it, given that there's smarter money knowing that prices generally double within 6 months of halvings anyway. But if we have a down period, maybe I can find some facilities for cheap again, right? So if that's the case, the whole argument that I originally stated about why would I split an investor dollar 50-50 or 30-70 into a cost center, if that number ends up being 5%, 95%, sure, why not, right? Because then I get an almost free facility. So
absolutely.
Keep an eye out, but that's always that's a situation where when blood's running in the streets, you buy real estate, right? So you need a down market for that to happen, and hopefully we're not going to see that anytime soon, but we might, and we'll be prepared to do that. So that's kind of general strategy, shorter term. Longer term, I would like Gryphon to be the Google or the Microsoft of Bitcoin blockchain, and what I mean by that is when you look at Google, they first started off as search, built a massive franchise there, made a ton of money, and then use that capital to start going into other things. I have a Google Home in my house. We have phones.
I didn't understand.
Oh, and now my Google started talking to me. That's hilarious.
Well, we won't even edit that out. That was too good.
That was awesome. So, and that's the thing is they use that to branch into other things and become dominant in the space. I think it's possible for us to build our capital, build our moat in the Bitcoin mining space, have that reserve capital, and then support the development of other things in the blockchain that I don't even know about. And that's the key thing is I see this again, like the internet, where there are so many different things that can come from it. And chances are the really cool stuff we haven't even thought of yet. And so I would love to be in a position where we can allocate very small amounts of capital, maybe like $1 million or $2 million, which to us at that point might be 1% or less of our capital, but is a massive first step investment for a startup and help develop these things and maybe even end up branching into those areas after we do those developments and becoming a Google, which is, spiderwebbed into other areas of space in the blockchain. There is an opportunity for someone to dominate blockchain, like any business dominates their industries. Why not us? And I don't know if anyone else is thinking this way, but it's more a matter of I don't know what I don't know, but I think something great's going to come. And so I wanted to at least be open-minded and looking to participate and help the development of those things. Because as I said, teenage Rob wanted to do some cool things. He wanted to make a lot of money, of course, but he also wanted to do some cool things in a space that emerges. And maybe I can do that in blockchain here.
That's all unbelievably exciting, Rob. Actually, just to maybe scratch my own itch, I'd be curious, does a mining pool hit your radar as something like appealing or interesting enough to, like you said, maybe at least leave the door open to hear more?
I would always, as I said, we always are open-minded to listen to things. I would share that when I was with Riot, we aggressively were looking at starting our own mining pool. And we pretty much figured out that it was a zero margin business after a while because of the competition and how it'll end up being the lowest cost usually gets the hash rate. So we thought it was going to be a difficult business to run. Plus, you'd also be the focal point of everyone trying to hack you, which is a bit of a pain in the ass.
Sure.
So there's that. But again, we'd always be open-minded because there could be a thought process that we haven't thought of that makes sense. So maybe, but I've gone through the exercise at least a few years ago before, and it came out to be a low return for the effort type of business. But I could be wrong.
Okay. That's an itch I wanted to scratch. I think you and I maybe an offline chat.
Sure. Yeah. Again, always looking for new ideas.
Cool. Well, Rob, this has been an absolute pleasure. And then you left us with a bomb of awesome news at the end here too about, what the near term looks like at Gryphon. I'd love to have you give a handoff or plug where the audience can find you, or maybe Gryphon at large. Like, point the audience where you want to point them so that they can get in touch with you guys.
Yeah, well, our main website is gryphondigitalmining.com. So certainly would love our investors or people just interested in us to certainly take a look there. There's also our Twitter, which we think is pretty active. It's at Gryphon Mining. We drop the digital because it gets too long there, but it's at Gryphon Mining. And then, of course, my Twitter is connected to that as well. And we try to be engaged with our investors as much as possible. And that's one of the key things for us is, given that I came from capital markets and I understand the whole regulatory issues, we try to walk the line of being as engaged as possible with our investors while still being, of course, on side with regulations. And I would like to think that we would be on the more investor engaged side than the conservative side, because oftentimes you hear nothing from the company. I try to provide as much access as possible, which is reasonable, to investors. So if they ask me questions, I sometimes do respond and answer, as opposed to usually it going into the abyss and nothing comes back. But of course, within reason. I can't tell you what I think the stock price is going to be or who we're buying next, stuff like that. Obviously, we can't talk about, but whatever we can talk about, I try to.
That's fantastic. I appreciate that. We'll link to everything in the show notes as well, so people can just scroll down and click and jump in to find more. Rob, like I said, this was absolutely a blast and a pleasure. So thank you very much for your time, and you take care.
Yeah, thanks very much. This was fun.